Have you ever wondered how to turn a small investment into a fortune? What if I told you there's a guide, based on the wisdom of one of the greatest investors of all time, that can show you the way? Warren Buffett, with his unique and disciplined approach, unveils the secrets to achieving financial greatness. This guide is not just about making money, but about building lasting and ethical wealth. We live in an era where information is abundant, but true knowledge is rare. Many of us fall into the trap of following fads and dubious financial advice, resulting in frustration and losses. But what if I told you that the answer lies in the timeless principles followed by Buffett? He shows us that with intelligence, initiative, and integrity, anyone can achieve financial success. Get ready to dive into a world where simplicity is key and patience is rewarded. Contrary to popular belief, you don't need to take extreme risks to get rich. On the contrary, Buffett teaches us that the path to wealth lies in well-founded decisions and valuing fundamentals. This guide will take you down that path, revealing the rules that can transform your financial life. Curious to learn more? Let's explore together the strategies that made Buffett a legend in the investment world. From investor behaviors to intrinsic value calculations, this guide offers valuable insights that, and the best part, it is accessible and applicable to everyone, regardless of your financial knowledge level. Prepare for a transformative journey. Let's unravel Warren Buffett's secrets together and discover how you too can achieve financial greatness. Ready to change your life? Let's begin. Warren Buffett is a name that resonates in the investment world as a beacon of wisdom. He not only turned $1,000 into millions, but also shaped how we view the financial market. Imagine taking a modest amount and, through intelligent decisions and a keen eye, watching that amount grow exponentially over time. This is something that few can do as masterfully as Buffett. He shows us that the secret lies in understanding fundamentals and having patience. One of Buffett's secrets to success is his ability to find value where others do not. He looks beyond immediate numbers to understand the true essence of a company. This is not something you learn overnight, but with study and practice. For example, Buffett often analyzed companies that were off the radar of common investors, seeing potential where no one else did. He teaches us that, when investing in the stock market, it is crucial to look beyond the obvious and seek hidden opportunities. Buffett also reminds us of the importance of good planning and a well-defined strategy. He does not make decisions based on impulses or short-term trends. On the contrary, he analyzes the market with a long-term perspective, focusing on sustainable growth. This is a point we often forget when we are eager to see quick results. In reality, financial psychology teaches us that patience and discipline are essential to achieving great returns. Moreover, Warren Buffett is a great example of how simplicity can be effective. He does not get carried away by complicated technologies or passing fads. Instead, he focuses on what really matters, the company's fundamentals. This makes us reflect on how we sometimes overcomplicate our investment strategies when, in fact, the answer may lie in the simplicity and clarity of basic principles. Finally, Buffett shows us that it is possible to build wealth consistently and ethically. He emphasizes the importance of making conscious and responsible investments. This not only brings financial returns, but also builds a solid and lasting reputation. And speaking of ethics, did you know that one of the main traits Buffett values in his hires is integrity? This leads us directly to the next point, where we explore Buffett's key hiring traits. You will be surprised at the importance of these attributes. Let's go. Key hiring traits. When Warren Buffett talks about hiring, he is incisive. Intelligence, initiative, and integrity are fundamental. Without integrity, the other two traits can be dangerous. Imagine hiring someone brilliant but without principles. The results could be disastrous. Buffett teaches that in any team, integrity must be the foundation. It is this quality that ensures decisions are made for the good of the company, and not for personal interests. Buffett values intelligence not just as knowledge, but as the ability to solve problems creatively and efficiently. He looks for people who think outside the box, who bring innovative solutions to the table. Initiative, in turn, is the ability to act and make decisions without constant supervision. This is vital in a dynamic business environment, where the ability to adapt and respond quickly can make the difference between success and failure. But it is integrity that really seals the package. Buffett believes that a person with integrity is trustworthy, transparent, and fair. These characteristics create a work environment where everyone can thrive. A practical example of this is the choice of managers for his companies. Buffett prefers those who demonstrate a balanced combination of competence and ethics. He knows that an honest leader inspires confidence and loyalty, essential elements for long-term success. To apply this in our lives, we must evaluate not only our own qualities, but also those of the people we surround ourselves with. In business or any other sector, it is vital to build a team based on these principles. Ask yourself, am I valuing integrity in my hires and partnerships? This can make all the difference in achieving your goals. And when thinking about investments, remember that integrity also applies to choosing the companies you invest in. Speaking of investments, it is crucial to understand investor behavior. Many of us have fallen into the trap of following market euphoria without considering the real fundamentals of companies. This brings us to the next point: investor behavior and how to avoid common mistakes. That can be costly. Let's explore this together. Investor behavior. Investor behavior can be quite unpredictable, especially during bull markets. Many get so excited about quick gains that they forget to analyze the real fundamentals of companies. Warren Buffett warns us against this trap. He notes that it is easy to get carried away by collective enthusiasm, but it is precisely at these moments that we must be more cautious and rational. Financial psychology teaches us that emotions can distort our investment decisions. Buffett advises staying calm and analyzing the situation with a clear and logical view. He has mentioned that the market is a voting machine in the short term, but a weighing machine in the long term. This means that while stocks may rise or fall quickly, the real value of a company is revealed over time. A practical example is the dot-com bubble in the late 1990s. Many investors bought shares in technology companies without evaluating their business models or long-term sustainability. When the bubble burst, many lost fortunes. Buffett, on the other hand, avoided these speculative investments, focusing on companies with solid fundamentals. This prudent approach is something we can all adopt, avoiding following the herd and making decisions based on careful analysis. To apply this, always consider performing a fundamental analysis before investing. Examine the balance sheets, cash flow, and market position of any company before making a decision. Books like The Psychology of Money by Morgan Housel can offer valuable insights into how our emotions affect our financial choices. Staying informed and educated is essential to avoid common mistakes and make more solid investments. Now, speaking of investment strategies, Buffett started his career with an approach he calls the cigar butt approach. Let's understand how he transformed this initial strategy into an approach that led to phenomenal success. Get ready to learn something really interesting. Cigar butt approach. In the early years of his career, Buffett adopted the strategy known as the cigar butt approach. He bought undervalued shares of low-quality companies that still had one last puff of profit. This approach involved finding businesses that, despite not being promising in the long term, offered small short-term gains. Imagine picking up a discarded cigar on the street that still has one last puff. It may not be the best experience, but you can still enjoy it a bit. This initial strategy of Buffett shows how meticulous he was in willing to find value where many did not see it. He looked for stocks that were being sold at extremely low prices but could still offer some return. Although this approach worked well at first, Buffett soon realized its limitations. The return was small, and the companies often had fundamental problems that prevented them from growing. Over time, Buffett evolved his strategy, moving to buying high-quality businesses at fair prices. He understood that investing in solid companies with long-term growth prospects was much more profitable. This shift in approach reflects his growth as an investor and his ability to adapt his strategies based on new learnings and experiences. For those starting in the world of investments, this story is a valuable lesson. Starting with small bets can be a good way to learn. but it is essential to evolve and seek companies with solid fundamentals. Study the lessons of successful investors and apply these strategies in a way that fits your reality. A good starting point is to understand your own circle of competence, something Buffett values highly. And speaking of that, let's explore now the concept of the circle of competence and understand how it can transform your investment approach. Ready to discover more? Circle of competence. Warren Buffett always emphasizes the importance of knowing your circle of competence. This concept is simple but powerful. Invest only in what you really understand. Imagine trying to navigate unknown waters without a map. The chances of getting lost are very high. The same goes for investments. Focusing on areas where you have knowledge and experience can significantly increase your chances of success. Buffett believes that recognizing your limitations is as important as knowing your strengths. He avoids companies outside his scope of knowledge, preferring to invest in sectors where he has a deep understanding. This focus allows him to make more accurate analyses and informed decisions. To apply this, identify the industries and areas you know well. Concentrate your investments in these areas where your expertise can really make a difference. A practical example of this is Buffett's investment in Coca-Cola. He deeply understood the beverage market and the powerful brand that Coca-Cola represents. This knowledge gave him the confidence to invest heavily in the company, resulting in one of the most successful investments of his career. This shows us that by investing in companies we understand, we can make safer and more strategic decisions. To expand your circle of competence, dedicate yourself to continuous learning. Read books, attend courses, and stay updated on market trends. Books like The Psychology of Money and School of Greatness can offer valuable insights. Always be willing to learn and grow, but without losing sight of your strengths. Remember, it is better to be a master in a few areas than to have superficial knowledge in many. Speaking of learning from mistakes, Buffett also teaches us about errors of omission. These are missed opportunities that could have been highly lucrative. Let's explore how these omissions impacted Buffett and what we can learn from this. Errors of omission. Buffett often mentions that errors of omission are more painful than errors of commission. Missing a significant opportunity within your circle of competence can be frustrating. Imagine knowing that you could have invested in a promising company but did not do so, due to lack of action or confidence. These missed opportunities can weigh heavily on long-term performance. A classic example is Buffett's missed opportunity with Google. He recognized the company's potential but did not invest. Later, he admitted that this was one of the biggest opportunities he let slip. This teaches us that often it is not just about avoiding mistakes, but also having the courage to seize opportunities when they arise. Evaluating and acting quickly is crucial. To avoid these errors of omission, it is important to have a rigorous analysis process and always be alert to opportunities within your circle of competence. Establish clear criteria for evaluating opportunities and be prepared to act when they present themselves. Developing a healthy sense of urgency can be key to not letting valuable opportunities pass by. Additionally, reflect on your past decisions and learn from them. What opportunities did you miss and why? Analyzing these moments can provide valuable insights for future decisions. An error of omission can be turned into a powerful lesson if you are willing to learn from it. Use these lessons to adjust your strategy and continuously improve. Now that we understand the importance of acting on opportunities, let's explore the concept of intrinsic value. This principle is fundamental to Buffett's investment decisions and can transform your investment approach. Ready to understand the real value of a company? Intrinsic value. The concept of intrinsic value is central to Warren Buffett's investment philosophy. He believes that a company's value lies in its future cash flows discounted to present value. In simple terms, this means evaluating how much money a company will generate in the future and bringing that value to the present. This principle guides all his investment decisions, ensuring that he only buys when the price is below the company's real value. To calculate intrinsic value, Buffett carefully analyzes projected cash flows and applies a discount rate to bring these values to the present. This requires a deep understanding of the company's finances and the sector in which it operates. An example is his analysis of Apple, where he saw robust cash flow and a loyal customer base, justifying his significant investment in the company. This shows how careful analysis can reveal solid investment opportunities. Investors who want to apply this principle should start by learning fundamental financial analysis. Books and courses on corporate finance can be extremely helpful. Tools such as balance sheets, income statements, and cash flow statements are essential for this analysis. Additionally, it is important to have a clear view of the industry and market trends that may impact the company. In the long term, adopting this approach can transform your way of investing. Instead of following short-term trends, you focus on the real value of companies. This not only increases your chances of success, but also provides a solid foundation for your decisions. Patience and discipline are crucial here, as the true value of a company can take time to materialize. Understanding intrinsic value leads us to a deeper and more grounded view of investments. This concludes our guide on Warren Buffett's strategies and lessons, but opens the door to applying all this knowledge in a practical and effective way. Let's now create an engaging introduction for the Guide 10 Rules for Financial Greatness that will capture the reader's attention and curiosity. Long-term mindset. Warren Buffett is a firm believer in the long-term mindset. He believes that the key to financial success lies in thinking beyond immediate gains and focusing on sustainable growth instead of chasing quick profits. Buffett invests in companies he believes have the potential to thrive for decades. This means choosing stocks based on solid fundamentals and not short-term market fluctuations. Adopting this mindset can completely transform your investment approach, promoting more informed and less impulsive decisions. Reinvest profits. Another essential principle in Buffett's philosophy is reinvesting profits. He does not just settle for receiving dividends, but uses them to buy more shares of promising companies. This continuous reinvestment is a powerful way to grow your portfolio and maximize long-term returns. By reinvesting, you take advantage of the power of compound interest, where profits generate more profits over time. It is a simple but extremely effective strategy that any investor can adopt to accelerate their financial growth. Avoid debt. Buffett also emphasizes the importance of avoiding unnecessary debt. He believes that debt can be a significant obstacle to financial success, as accumulated interest can consume a large part of your earnings. Instead of financing investments with borrowed money, he prefers to use his own capital or wait until he has the necessary funds. This prudent approach avoids the risks associated with leverage and ensures a more stable financial foundation. Reducing and managing your personal debts can be a crucial step toward achieving financial freedom. Now that you know Warren Buffett's 10 rules for financial greatness, it's time to put all this knowledge into practice. Apply the principles of intelligence, initiative, and integrity in every financial decision you make. Ask yourself, am I investing in areas I really understand? Am I analyzing the intrinsic value of companies before buying stocks? Remember, investment success is not a sprint but a marathon. What changes can you make today to start walking the path to financial greatness? Perhaps it's time to reevaluate your investment strategies, focus on solid fundamentals, and avoid market euphoria. Think about the opportunities you may have missed and how you can better prepare to act next time. Which companies within your circle of competence deserve more attention? And last but not least, integrity. It is the foundation upon which you should build your success. Do not be swayed by shortcuts or promises of quick gains. Warren Buffett teaches us that true wealth comes with patience, study, and ethical decisions. How can you ensure that your actions reflect these values going forward? If you want to continue learning and applying these principles, subscribe to our channel and turn on notifications. Let's together unravel the secrets of the greatest investors and transform our financial lives. Each video is an opportunity to learn something new and take another step towards financial independence. Don't miss this chance. So, are you ready to transform your financial future? Subscribe now, leave your comment on what impacted you the most in this guide, and share it with friends who also want to learn to invest like Warren Buffett. Let's achieve financial greatness together.